everyone, it is the 1st of September 2025 and today I am gonna walk you through the European energy markets for the week ahead. My name is Marcello Colax, I'm the Managing Director here at Clever Markets. As always, everything you see here is just my humble opinion, and of course it is not an invitation to trading and is also not trading advice. So this is what we are dealing with at the start of this week. So we can see that at the results of our weekly TTF sentiment poll remains bullish. So this is what we had last week. 50% of the market said that the market is more likely to move higher at the start of last week. Now the bulls are still dominating, but not as much as they previously have, and this is perfectly in line with what we're expecting on the technical side as well. So we do expect a strong open at the start of this week before the bears eventually continue. So what are the charts actually telling us? Well, here we are on the TTF front month, the NBP front month, the TTF and NBP front season. Here we have, what is this? EUAs, we have German power, we have the Henry Hub, and we are looking at Brent over here. So you can see that for all these markets, we did break out of the sideways range that we were dealing with just a couple of weeks ago. And the market has since then started to make lower lows and lower highs. So you can see we are making lower peaks and we're also making lower troughs. So that ultimately means that for the TTF and for the NBP, the markets are bearish on the daily chart. So it is looking a little bit different on the EUAs, where the bulls are still holding up and the bears are making higher troughs over the past couple of weeks. So this in itself could be a potential bullish setup, but I'm not too sure. I'm just observing it, and we are talking about the details in just a moment. So on the German power market here, once again, we have broken past the sideways range, and we are now making marginally, we're definitely making lower peaks, and we are marginally making lower troughs as well. So for all these markets that I just pointed out, there's a chance for us to start strong before the bears continue. So what do I mean by that? I am starting with the TTF front month as always, and I'm not going to bore you with the weekly chart because that has flatlined quite some time ago. But here, just a little overview. Overall, still rather bearish, but the bears stopped making progress in what is this? April 25. Okay, so let's have a look at the daily chart. So you can see once again, this here used to be the sideways range that was then resolved to the downside. The bulls recovered a little bit, and but they didn't manage to push fully back into the rectangle. So we are now making lower peaks and lower troughs. We are working with this descending channel, and channels, in this case descending channels, are super useful for trade setups. So here, for example, they help us with identifying the start of the primary downtrend. So this is like the down leg, right? This was kicked off, when was this? Last week on the 26th of August. It is telling us roughly how low the price can go. When we are up here, it's really difficult to tell, but the closer we get, the better we get a signal for short exit or contrarian long entry. So for now, the daily chart's downside target is near 29.15. Now here's the thing, if we're trading within these channels, I'd like to trade more on the hourly chart in general, because here we are dealing with actual swings. So if your trading strategy ever starts depending on guessing the color of the next candle, like here, oh, I hope the next candle is red, I hope the next candle is red, to make it down here, then it tells me that we are on too high of a time frame. So instead, we like to zoom in and start working with, once again, these swings here. And it's really helping us, right? So here we had a rounded top happening that is showing us that the market slowly and deliberately was trying to figure out if the bears should be truly in charge, and they should, according to them. At least for a little bit, the bears didn't fully push through, even though we had this really strong bearish setup, and we were at the end of last week confronted with this ascending triangle. Ascending triangles are chart patterns that are showing us that the bulls are willing to buy at higher and higher prices, whereas the bears are holding firm for now, selling up here. And this rising bullish sentiment is setting the market up for an eventual break higher, which is also in line with the TTF sentiment poll, if you remember. So we also believe that the market could open strongly, possibly towards 32.8. This doesn't seem too crazy as a primary case before the bears continue. Now, why do you think that the bears are more likely to continue overall? Well, once again, we call this multi-time frame analysis. So looking at the daily chart, we see that the oscillators are firmly bearish. We see that the bears are in charge on the DMI indicator as well. And we are seeing that the bears are still kinda in charge on the MACD, so on the momentum tool. So I'm not too fond of the momentum tool right now. It's we're like zigzagging in a really wide range, but we obviously have peaked out and we are coming off at least a little bit. So what's the verdict? Strong open before the bears continue eventually. Alright, now I'm not going to bore you with the TTF front season or the two NBP contracts, because here we are exactly working with the same stuff. Oh yeah, one more thing I definitely want to mention about the TTF front season, front month, and all the other ones, is assessing the height of the target. So how high could the price actually go before we know that the market will reverse? Well, we are doing a few things here. For one, we are working with a Fibonacci retracement level. So we have picked out the ultimate peak here, where the ultimate trough is here. So on the Fib retracements, we put the 0 down here and the 100 up there. And you can see we have all these Fibonacci retracement levels, right? We have one at 32.131, which is the 38.2% Fib retracement. And we do have the 61.8% Fib retracement at 32.8. And usually the strong corrections go to a maximum of the 61.8. If we were to push above this, that means that the bears are not going to come out on top anytime soon, and we are probably moving then in a sideways range for a little bit. So by one measure, the market could top out at 32.8. Another way to assess this upside target that we expect is simply with the ascending triangle itself. So I'm now selecting the Fibonacci extension tool, but I'm just doing this to get a measurement in. And what you're trying to do is we're trying to measure this distance here. So I'm just taking my tool, click, click, and then we apply it to the breakout direction. So this distance is applied to the breakout direction, and it's giving us a target at, well, let's call this 33, right? 32.8, 33, fairly close to each other, so we could expect the market to top out in this area. I am not going to bore you with the TTF front season or the NBP and front month and front season. They have all evolved more or less exactly the same. Instead, I want to look at the German power market real quick. So here it's kind of exactly the same. Ultimately, we are more likely to continue lower within this descending channel. And on the hourly chart, the setup looks a little bit different. So you can see there is no ascending triangle that can be resolved overall. So right now, we are simply working with this flow of higher highs and higher lows. Looks pretty good, right? So last week ended with this candle here. So this overall, at the end of an uptrend, could be interpreted as a hanging man. And the hanging man is a bearish candle pattern in and of itself. And how this candle has been developing is pretty standard. So as the up leg is topping out, we would usually be seeing a series of smaller candle bodies. Well, apart from this one, candle bodies have been pretty strong, right? So I want to show you the Clever Markets playbook on making sure that the candle pattern that you're seeing is more likely to play out or not. So you can see the first thing already not fulfilled. The bodies are not really getting smaller, so the confidence isn't really deteriorating right now. Okay, so it's still looking fairly bullish. You want to see longer wicks as the market is topping out. So if we start getting longer wicks, that means the market is like testing out a direction without a clear winner. Not really happening yet. Okay, so this also isn't really the case. What else can we look at? Well, this pattern itself, we could mark out the bottom and the peak of it to get an invalidation level and the validation level of this bearish hanging man candle pattern working out. So we could put one at, we could put the validation level at 84.2 and we could put the invalidation level at the high at 84.45. Alright, so what else can we look at to make sure that the candle pattern we have in front of us is actually working out? Here, let's go to the next slide on the, or not the next slide, let's go to the next page of the Clever Markets playbook. First of all, is this pattern happening at an important support or resistance level? Well, let's check this out. Is it happening at an important support or resistance level? I wouldn't say so. There isn't really anything that's really striking me as being important. It's not a round number. It's not really a fib level. It's not a peak. It's coming out of nowhere essentially. So that already isn't really the case. So this potentially bearish candle pattern is not forming at an important peak. Did we get a bullish oscillator signal and did we get high volume on this candle pattern? Okay, let's have a look at this. What's the volume doing? So here on this last candle, let's zoom out, get some perspective for scale. The volume definitely was much higher than recently, or the hours preceding that, or that session in general, but it is more or less in the average of what it has been previously. Also, please note that this was the last hour of the last day of the week, of the last day of the month. So of course we're going to see some rising volume. So overall, I don't think it's anything special here in terms of volume. So did we get a bearish oscillator signal? So a bearish oscillator signal would mean that, so here I'm using the slow stochastic. If we get this line here, the %K, the white line, cross below 80, then we would be getting a bearish signal. Didn't really happen yet, so you can see right here we would be getting a bullish signal moving out of oversold territory, and a bearish signal would be given if we move out of overbought territory. Not really happening here as well. So this brings me and our analysts here at Clever Markets to the conclusion that the price is more likely to continue higher at the start of this week, despite this bearish setup, because the bearish evidence is pretty weak. And here's the thing, I know I just took my sweet time with this because it's important to me that you fully understand why we are coming to the conclusions that we are coming to. And I hope that you find this incredibly useful for your own application of technical analysis on your charts every single day. Now, the last market that I want to show you is EUAs. Okay, now here we see that the market still is within its rectangle, right? You can see we haven't gotten any big peaks or troughs past this range for quite some time, past 68.9 and 73.35. We are still well within that. Now, what I've been thinking more recently, it is not part of the Clever Markets dashboard and I haven't voiced it before, is this turning into an ascending triangle, right? So probably in the next couple of sessions, I will try this out, drawing in an ascending trend line here and connecting it with this flat top here, which means that the bulls are ultimately more likely to resolve this pattern to the upside. We are already coming to this conclusion even without the ascending triangle, simply because the bulls have been pulling higher. So this would just be for ease of view to put a triangle in here. All right, so we are already working with it on the hourly chart with this ascending triangle, right? So on a daily chart would probably look a little bit like this here, probably, right? maybe like this. But we are working with a smaller version already on the hourly chart, also setting the market up for bullish continuation, for a bullish momentum trade even, if we push above 73.35. So for this, of course, you want 2 consecutive hourly closes above this 73.35. For now, there is a chance for us to continue swinging within this range. So we're not 100% certain here, but if the market holds firm, then probably another swing before we continue higher. If we push higher immediately this morning, well, then we'll just do that. So I hope you found this useful. By the way, some of you might be noticing, hey, Marcello's background is looking a little bit different, marginally different. That's because we moved offices, and I will set up the full studio in the next couple of months. I just want to share something with you. Like, this is what it literally looked like yesterday. So there was just cartons and boxes everywhere. So this was no good at all. And right now, what you're being faced with is my current setup, which looks a little bit like there you go, like this rather. So I hope I'll give you a few more views behind the scenes the next couple of weeks on LinkedIn, so do stay tuned there as well. Everyone, have a good start into the week. See you around, and bye bye.